Ladies and gentlemen, welcome back to another video. I'm your host, TheDividendAristocrat, and in today's video, we're going to be taking a look at my most important portfolio milestone yet. Now, if you can't already tell from my portfolio dashboard, this past week, I finally broke the $100,000 mark on my portfolio, and we're going to be taking a look at how I did so and why this portfolio milestone matters so much. Now, as always, if you do appreciate the transparency and enjoy this type of content, consider subscribing to the channel. It does help me out a ton. As a reminder, this is not financial advice, and I'm just merely sharing my opinions on this channel. Now, with that being said, let's start by taking a look at my portfolio dashboard. And this is actually pretty important for today's video because it's going to give us a lot of insight into how I hit that $100,000. So let's get the big thing out of the way first. The main way that I hit $100,000 is by, of course, investing a pretty large amount of my own capital into the portfolio. Now, since I'm pretty early into my investment journey, the most influential factor allowing me to hit 100K is how much I was able to invest in the portfolio, which at this point is right under $67,000 per year. Now, the growth in my individual positions did aid in the compounding that was happening in my portfolio with a total return of over 55%, but still over time, this is going to become more influential than my total invested. But for now, the majority of my money, of course, comes from the amount I invested into the portfolio. I do expect a time in the future where my portfolio value will be mostly related to my compounding and gains in the portfolio and not my amount invested, but that's going to take at least a couple more years. Now, this past week has been amazing for me and the portfolio has seen a good amount of gains. It's now sitting at over $104,000 in total value with an unrealized gain of $37,000. I also do have a lot of dividend paying stocks in the portfolio, and my total dividend earned since starting the portfolio is $3,080 with a yearly income of almost $1,400, meaning I'm going to be paid out $1,400 for my positions every single year going forward, and that will continue to grow as well. In terms of yield, that does give me a pretty low yield at 1.34%, and that's because many of my positions either don't pay a dividend or pay a pretty low starting dividend yield. That being said, the yield on my initial cost is significantly higher at over 2%, and that's because I bought a lot of these stocks on some nice discounts. In total, I currently have 20 different holdings, which you can see right down here with a cash position of $4,300, which I'm trying to stack up in the meantime. Now, this video is going to act as an overview where I kind of explain how I hit that $100,000 mark and mostly go into detail on why it's so important and how it's going to impact my future potential earnings in the future. If there's anything specific I missed in this video or anything you want to see in a future video, definitely let me know down in the comments below and I'll be sure to get to it. Now, we will take a look at some of my individual positions, but I am planning over the next couple of weeks to make a video specifically highlighting my entire portfolio where I'll go over every single one of my positions and how I built up those positions. If you guys are looking forward to that, make sure to stay tuned to the channel. It will be coming soon. So taking a look down here, the reason I want to highlight this table is because it shows how much I've invested and how much I've received in dividends every year since starting the portfolio. And the main one I want to highlight is the amount invested for this video. So I've had this portfolio going for almost 6 years now. My initial investment was in October of 2020, so we're kind of rounding out that 6-year mark pretty soon here. Now, it was a very small initial investment relative to my current investments, and that was $3,000 into the portfolio. But since then, you can see that it's continued to grow aside from a couple small dips in 2023 and 2024. Now, the main reason that happened at the time was because I was pretty hesitant to invest as the S&P 500 was racing up, but eventually in 2025, I realized it did not benefit me to continue sitting on the sidelines and invested pretty heavily with a cash position that was piling up over these 2 years. Now in 2026, I've already invested over $13,000 into the portfolio, and I'm planning on hitting between $15,000 and $17,000 for the year unless we see some significant crash in the market, in which case I might try to invest even a little bit more than that. If you guys have not yet had the chance to watch the video where I do highlight my investing strategy, I'll give you a quick rundown right now just to fill you in. Basically, every single week I make consistent buys into my portfolio now, and the way I do so is by doing $200 into VOO and $50 into schd every single week, which is about $1,000 per month. Outside of that, any extra money that I do have remaining in the portfolio, I can invest towards individual positions, with my most recent purchase being Uber, which we'll take a look at shortly. So far, I think the strategy has worked out pretty well for me and has helped me balance out my portfolio. I was getting pretty heavy into individual stocks, so with my weekly recurring investments in the VOO and schd, it maintains a pretty balanced foundation to the portfolio. So speaking of orders, I don't want to use this video in order to take a look at every single purchase I made in the portfolio, but I do want to highlight some important times in my portfolio investing journey. So as you can see right here, this is my first ever investment. It was VOO, and I bought 9 shares with a total order of $2,800, and the price at the time, which is pretty crazy to believe, was $312. Now, if you guys have not been keeping up with VOO's stock price, check it out. It's pretty crazy. It's now at over $700 per share. And because of that, it makes up a pretty substantial amount of my gains in my portfolio, with it also being my largest individual position. Now, every time I think VOO can't continue to go higher, it surprises me and continues to do so, which is why I like the fact that I've been dollar cost averaging into the position. Right now, I'm obviously buying it at 52-week highs, which is not ideal because I do think eventually the stock price will come down. But at that point, I will of course dollar cost average to bring my cost basis down a little bit as well. The other thing I want to note here is it took me 2 years to buy my next type of ETF. So at the time I was only buying VOO, and then I decided to invest in schd. And I'll be honest, at the time it was specifically for dividend income. I bought 30 shares at $733 total, which was a pretty big investment for me. Now these days I have covered it in other videos. I don't buy schd for the same reason. I do enjoy the dividend it provides and the dividend growth it has had in the past, but the main reason I buy it now is for diversification. I like the holdings of the ETF, and I like how they complement my holdings in VOO. Now, funny enough, the first individual stock I ever bought was 3M, and guys, this was not a great investment, at least for a pretty long time. This thing crashed down all the way, I think, to $70 per share at some point, but has since more than recovered, and I still only own, unfortunately, 1 share. I am looking to sell this position, but I just haven't made the move yet. 2022 is when I started making a lot of changes into the portfolio, and I started buying a lot of individual stocks, and only time will tell if that was the right decision. Now fast forwarding to today, you can see my weekly purchases that I now do. I did not used to do them, but this is just for consistency's sake. $200 per week into VOO and $50 per week into schd, and I've been pretty good about doing them every single week, assuming I don't forget. Now the only buy here that's not VOO or schd is Uber, and you can see that I bought 14 shares on August 5th for $67.39, which is a total order of almost $1,000. Now the reason I did this is because Uber recently released earnings, and I thought the earnings were very strong, but the market seemed to disagree, driving the stock price down, and I definitely took advantage of that opportunity. I decided to buy 14 shares specifically because I already owned 86 shares, and I thought it'd be nice to have an even 100. Pulling up Uber, in the past couple of days, it's actually done really well. You can see here the dip after earnings, but now we're actually sitting higher than before earnings. And if I bought it at the bottom, which was around $67 per share, it's actually up about 10% since then, which is pretty nice. Now, of course, the short-term price movement doesn't matter to me too much. I am buying for the long term, and I do hope that Uber's stock price will correct to where I believe its fair value is, which is much closer to $100 per share, and continue to grow afterwards. Regardless, I'm not in a hurry for this to happen. If the market wants to keep beating down Uber, I'll probably continue accumulating a couple shares here and there until it does decide to re-rate the company. I think now is a good time to jump in and take a look at my future value calculator, and this is the main part of the video I want to focus on because it does show how my portfolio is expected to grow in the future and why $100,000 is such an important milestone for me. If you guys do want to try out this future value calculator for yourself, I'll leave a link in the description of the video as well as the pinned comment. You can play around for it for yourself for free. So my starting principle is just my current portfolio value, and my annual contribution can be whatever amount I decide. Right now I'm projecting to invest about $1,000 a month or $12,000 a year, but of course some years it's going to be higher and some years it's going to be lower. My annual dividend yield is just my current dividend yield in the portfolio, and my expected dividend increase and expected price appreciation can be changed as I see fit. Now, usually I'll play around with these values here where I can choose how many years I want to project it out to, but that's not what we're going to be using today. So the first thing I want to do is I'm going to leave the $12,000 the same. I think that's pretty accurate, but let's assume we have an 8% price appreciation per year, which is a little bit lower than the 10% that the S&P 500 has been averaging in recent years. Now with that amount, you can see that by year 5, I will have hit $200,000 in portfolio value, and realistically it's actually only 4 years. So this is the beginning of year 1, which is right now at $104,000, year 2, $125,000, year 3, $149,000, year 4, $175,000, that's the beginning of year 4, and the beginning of year 5 will be $203,000, so realistically 4 years from now. So if you guys remember earlier, it took me 6 years to hit $100,000 in my portfolio, but if we continue to have an 8% price appreciation per year, it'll take me only 4 years to hit the next $100,000. Now, since I started investing, I will say that I probably got more than 8% per year in price appreciation, so it was a bit of a quick journey to that first $100,000. So this next one might be as quick as well, or it might take a little bit longer. Now this does take a lot of assumptions into consideration, but if they do hold true, we can see that it'll only take 1, 2, 3 years for the next $100,000, and it'll take even less than 3 years for the $100,000 after that. Scrolling down a little bit lower, we can see that with this pace, we can hit $1 million within 20 years of today, which is pretty good. Now, what I do want to point out is that initially the annual contribution is going to be making up for a lot of the value that we see in our portfolio, but over time it's going to be making less. So just for example, let's take a look at the beginning of this journey. If we assume that it's going to take 4 years to hit the next $100,000, we can see how much of that is my annual contribution, and that would be $48,000, so about 50% of it. Now, if we instead multiply that by the 19 years that it'll take to hit $1 million, we can see that that'll only equate to about $228,000, which is a pretty small portion of that $1 million portfolio value. The point I'm trying to make here is that over time, the compounding of my positions will be much more significant than my annual contribution. Now, the only other thing that I want to point out here is that if you are thinking that $1 million takes a lot of time to hit, you'd be right, but it also depends on your annual contribution and how much price appreciation you experience in the portfolio. If instead of $12,000, we assume that I invest $20,000 every single year, which is unrealistic currently, we can see how much faster we'll be hitting those portfolio milestones. In that case, between years 16 and 17 is when that $1 million mark will be hit, which is much quicker. If instead we project out a 10% price appreciation per year, then it'll be even quicker than that. We'll be hitting $1 million by the 15th year, which is pretty ridiculous. Now, you guys can use this tool as you see fit. For me personally, I always like to use conservative values for the worst case scenario. I don't personally believe that I can guarantee a specific price appreciation per year in my portfolio, so I don't try to do so. Especially with the large concentration of my holdings being in VOO and schd, I'm pretty bound to how the overall market performs over the long run. Now, going back to $12,000, we can also project it differently. There's a lot of YouTubers who like to say that they can hit 15% per year, and that might be true. And if you're one of those people who believes you're going to be hitting 15% every single year over the next 10 or 20 years, let's see how that plays out for you. With such rapid price appreciation, you can see that by year 14, you'd already be hitting that $1 million mark, which is pretty ridiculous. Now, of course, 15% per year is some pretty crazy performance, and I'm personally not projecting to be hitting that myself, but if you do manage to hit that in your portfolio, you'll have some quick growth and a quick road to $1 million, that's for sure. Now, before we do end this video, I just want to quickly take a look at my portfolio holdings section and just point out 2 different metrics to you guys to see which companies have made the most amount of impact on my portfolio. So for my best performing positions, my number 1 spot is Google, up 143% or a 2.4x multiplier, and then we have Apple up 132% or a 2.3x multiplier. Now, Apple was unfortunately a very small position. I bought this in 2022 back when my portfolio was significantly smaller, and at the time I believe I made it into my largest individual holding outside of ETFs. Now, since then, of course, you can see that my new investments into new positions like Google are just much larger because my portfolio value is much higher and I have more capital to invest. So even though Apple has performed very well in terms of percent change, it hasn't actually contributed as much to my total position size or my portfolio size because it is much smaller. Now, what we can do next is actually organize by my total change, so which ones have the largest monetary value increase, and that would be VOO, which is my largest position in the portfolio. In this case, VOO makes up 32.3% of my portfolio, followed by Google at 12%, schd at 10%, and recently Microsoft at 7% because I increased this position size substantially. Now, Uber too is a pretty large position at 7.2% of my portfolio value, but so far has been pretty flat on total returns, which is why it doesn't rank as high. Uber is up only $828, and over time I do hope it'll become one of my largest contributors to my portfolio gains, but only time will tell. So Google, being such a large position, has contributed $7,300 to my portfolio value, schd $3,200, Microsoft $2,400, and Texas Instruments $2,400 as well. Now, Texas Instruments is a double on the position, which is why it's done so well, and if we see a double on Microsoft at any point, this will become a $4,800 gain position in my portfolio. Now, some of my positions that are lagging include 3M, and that's because I only own 1 share of the position. It actually is up pretty nicely at over 65% total return, but the 1 share has only contributed $81 in terms of actual unrealized gains. Now, as always, that does bring us to the end of today's video. I really hope you guys enjoyed taking a look at my portfolio, my most recent portfolio milestone where I hit $100,000. I hope you guys did enjoy the perspective of why $100,000 is so important to me and how it sets me up well in order to hit that $1 million mark eventually. If you did make it all the way to the end of today's video and are comfortable sharing your portfolio value, definitely let me know down in the comments below. I'd love to hear it. If you haven't yet watched last week's video where I talk about my dividend income for the month of July, check out this video right here. And if you want to see my video covering Uber stock and why I'm buying more in the portfolio, check out this video right here. Remember, the best time to invest was 10 years ago. The second best time is today. I want to thank every single one of you guys for watching, and I will see you in the next one.